Welcome to the official video overview for the initial public offer of RAISE Power Infra Limited. We are engaged in the business of providing utility-scale end-to-end renewable energy solutions with a focus on solar energy solutions. This video is directed at and is intended for distribution to and use by residents of India only. The information in this video is not for publication or distribution, directly or indirectly, in or into the United States. No part of the contents of this video shall be copied or duplicated in any form by any means or redistributed. You are viewing this video on the basis that you have confirmed your representation, agreement and acknowledgement to the book running lead managers and RAISE Power Infra Limited that you are the intended recipient of this video and you are located in India. If you are not permitted to view this video or are in any doubt as to whether you are permitted to view this video, please exit this video. Caution: investors are advised not to rely on any other document, content or information provided in respect to the public issue on the internet, online websites, social media platforms, microblogging platforms by influencers. Investors are advised to rely only on the information contained in the offer document and price band advertisement for making investment decision. Investors are advised to read the draft red herring prospectus dated September 29, 2025. RAISE Power Infra Limited IPO comprises of a fresh issue of equity shares of face value of 2 rupees each, aggregating up to 9,000 million rupees, and an offer for sale of equity shares of face value of 2 rupees each, aggregating up to 2,500 million rupees. The offer for sale comprises the sale of equity shares held by the promoter selling shareholders and other selling shareholder in the IPO, and proceeds of the offer for sale will not be received by the company. RAISE Power Infra Limited was incorporated on June 13, 2011 with its registered office at Mumbai, Maharashtra, India and corporate office at Gurugram, Haryana, India. We specialize in the development of ready-to-build infrastructure for renewable power projects under our co-development business model and providing engineering, construction and procurement services for renewable power projects. We are among the leading players in the Indian solar industry with a demonstrated track record, along with being one of the pioneers of the co-development business model in India. Source: CRISIL Report. The CRISIL Report has been exclusively commissioned and paid for in connection with the offer, and any reliance on such information for making an investment decision in the offer is subject to inherent risks. As of July 31, 2025, we have successfully executed and commissioned 50 renewable power projects with an aggregate installed capacity of 1771.18 megawatt peak across both of our business models. Further, as of July 31, 2025, we have a robust order book of 80,342.61 million rupees, which includes 30 contracted projects under various stages of execution. We serve reputed developers in the private sector such as Serentica Renewables India Limited, Radiance KA Sunshine 7 Private Limited, Ampin Energy Transition Private Limited, as well as prominent public sector undertakings such as SGVN Green Energy Limited and Indore Municipal Corporation. A brief on the two key business models are as follows. Co-development business. Our co-development business involves creating ready-to-build infrastructure for renewable power project developers. EPC business. In our EPC business, we offer a complete range of EPC solutions from designing, engineering, procurement, construction, testing, and commissioning of renewable energy power projects for customers who own solar power asset. We commenced our operations in 2011 and commissioned our first project under the co-development business model in fiscal 2013, which is expected to remain our focus going forward. The efficiency and execution capability required to create a solar power asset directly impact project cost, timeline, and performance. As of July 31, 2025, we have divested 39 SPVs to our customers, which includes 36 SPVs under our co-development business model and 3 SPVs under EPC business model to reputed renewable energy players. Key details of our total portfolio and commission capacity across our two key business models as on July 31, 2025 are presented below. Investors should note the following important risks. We derive a significant portion of our revenues from our EPC business. accounting for 65.66%, 61.90%, and 37.91% of our revenue from operations in fiscal 2025, fiscal 2024, and fiscal 2023 respectively. Our inability to effectively execute projects under our EPC business may lead to project delays, which may adversely affect our business, results of operations, financial condition, and cash flows. A majority of our revenue from operations is from our top 3 customers, which accounted for 51.12%, 57.56%, and 60.45% of our total revenue from operations in fiscal 2025, fiscal 2024, and fiscal 2023 respectively. Loss of any such customers or reduction in business or demand from such customers may have a significant adverse impact on our business and results of operation. Our projects under execution as on July 31, 2025 are primarily concentrated in the states of Karnataka, Rajasthan, and Madhya Pradesh, accounting for 58.00%, 14.69%, and 13.27% of our order book, excluding order book from other business comprising of sale of electricity and O&M of 936.40 million rupees respectively. Any disruptions in our operations for our contracted projects due to adverse change in the economic conditions of these states could materially and adversely impact our business, financial performance, and results of operations. Our co-development business, which contributes 25.45%, 8.19%, and 46.49% of our revenue from operations for fiscal 2025, fiscal 2024, and fiscal 2023 respectively, is subject to various risks including timely access to suitable land parcels, availability of grid connectivity, and receipt of requisite approvals. There can be no assurance that we will always be able to aggregate land parcels at commercially viable terms, secure necessary approvals within anticipated timelines, or obtain grid connectivity in the required geographies. Any delay or failure in these processes could render our projects unviable or unattractive to customers, adversely affecting our revenues and profitability. Our business is heavily dependent on the procurement of equipment and materials from our suppliers. Our top 10 suppliers accounted for 54.99%, 65.17%, and 80.28% of our cost of materials consumed in fiscal 2025, fiscal 2024, and fiscal 2023 respectively. We face a risk that one or more of our existing suppliers may discontinue their supplies to us, and any inability on our part to procure equipment and materials from alternate suppliers in a timely manner or on commercially acceptable terms may adversely affect our business, financial condition, and results of operations. Please read the section titled Risk Factors beginning on page 43 of the DRHP. The promoters of our company are Ketan Mehta, Pawan Kumar Sharma, Sanjay Garudapalli, Shweta Mehta, Richa Sharma, Shruti Gupta Garudapalli, Mehta Family Trustee Private Limited, Mehta Family Trust, Sharma Family Trust, and Garudapalli Family Trust, who hold an aggregate of 256,816,185 equity shares, which constitute 89.74% of the issued, subscribed, and paid up equity share capital of our company. Our board has 6 directors, of which 1 is the chairperson and managing director, 2 are whole-time directors, and 3 are independent directors, of which 1 is a woman independent director. Company's revenue from operations as at and for the fiscal 2025, 2024, and 2023 was 12,206.41 million rupees, 10,487.99 million rupees, and 7,765.81 million rupees respectively. The operating EBITDA margin percentage as at and for the fiscal 2025, 2024, and 2023 was 15.91%, 11.45%, and 9.02% respectively. Investors are advised to read the DRHP, including pages 482 for further information on financials and related information. There are outstanding litigation proceedings involving our company, our promoters, our directors, our subsidiaries, key managerial personnel and senior management, and our group companies. Any adverse outcome in such proceedings may have an adverse impact on our reputation, business, financial condition, results of operations, and cash flows. For further details, see outstanding litigation and material developments on page 668 of the DRHP. Our company proposes to utilize the net proceeds from the fresh issue towards funding the following objects. IPO will be conducted through book building with allotment of not more than 50% of the net offer to qualified institutional buyers on a proportionate basis, not less than 15% to non-institutional bidders, and not less than 35% to retail individual bidders. The equity shares are proposed to be listed on BSE Limited and the National Stock Exchange of India Limited. Anand Rathi Advisors Limited and Pantomath Capital Advisors Private Limited are the book-running lead managers to the issue. Investments in equity and equity-related securities involve a degree of risk, and investors should not invest any funds in the issue unless they can afford to take the risk of losing their entire investment. Please read the draft red herring prospectus dated September 29, 2025 and any corrigendum or addendums thereto. Disclaimer: neither the company nor the promoters are seeking an investment from you based on this video. This is a video for information purposes only and is not a promotional video and does not constitute an invitation or offer to acquire, purchase or subscribe to the equity shares of the company. Potential investors should wait for the red herring prospectus to be filed in relation to the issue for making any investment decision.